There's been a real consolidation over that time in bigger VC funds like Excel, Index. The ones making money for their investors have been getting more money. And there's been fewer new companies started up in the meantime. But at the same time, there's almost two tracks going on. That there are companies like I mentioned today, now to Alaya. There's others. There's also in the UK, there's Eden Ventures. There has been some new blood coming in, new managers, new VCs. I think what's probably in the next 5 years more important is the smaller funds, the regional funds, and those funds with angel networks and things, because the internet enables much more capital efficient models. Companies can actually start now with €1 million, that's all they need. When you grow up in America, you always wanted to be a doctor, a lawyer, or an entrepreneur. Full stop. You never wanted to be in corporate business. If you live in Israel right now, you know somebody that was an entrepreneur that made a fortune by building a company and selling it. So what I mean is, in those countries with the established entrepreneur culture, you have a system that creates more entrepreneurs because people want to get involved. And I think Spain doesn't yet have, a lot of billion-dollar companies yet that were started like Google. In 5 years, they're, Twitter. Think about America, Twitter and Google and Facebook. All those companies started from nothing. In 5 years, 10 years, they're household names. Because we're co-investing with venture guys, we're doing the debt. Maybe debt doesn't work for that company. Maybe it's too early, maybe the model's not right, maybe they, for whatever reason, it doesn't. So there's times when our product just doesn't work, fair enough. There's times when the terms don't work, where us, the entrepreneurs, we can't agree terms. There's those times. There's other times where we look at a company and we think, we've done deals in 14 countries, so Spain is not the only place we invest. So if we find a company, for example, Abiquo was doing cloud management services. I have a partner in Israel, I have a partner in Sweden, we have partners in London, we do deals in the US. So we can look in all of those markets and find out who are they competing against. And there may be, in some cases, companies that are farther along, better products, better team, maybe more funding. So it may be that we don't invest because we look around the world and we say, you know what, there's a couple that are already ahead of them, that's going to be tough. But in the case of Abiquo, they were well ahead, great team, good money. So there are reasons, team, fit of products, terms, those things. Israel, because they have no home market, always did everything in English. They knew that the common denominator would be English. I think the Catalan companies, they have to think that big. They have to think immediately not about their home market, but think about if they want a venture capital company to back them and they want to grow, they have to think globally, which may mean doing their business plan in English and thinking about more than just home market. But I do think there's some technologies here that can get funded. I think you have the advantage here of some very good VC funds. You've got grants that help a lot. And I think a lot of those times you can get us a leg up and get things started and really show traction and momentum here before you launch elsewhere. We will meet the company, talk to the company. If we like it, one of my partners or I like it, we usually do a 2 to 3 page summary internally, and then we try to sell it to our partnership. If we can sell it there, we go back to the company and say, here's what we think we can do. Here's the terms, the size of the facility. Once we agree a term sheet, it takes usually 2 to 3 weeks of due diligence and documents, and it's very, very fast after that. The real hard part is to make sure there's a good fit. What investors are always looking for now is almost it's like the old school of being an entrepreneur. Cash management is key. Understand your sales cycles, understand your margins. I mean, it's the basics of building a business. Oftentimes when markets are going crazy, people forget this and they think their only job is to get users, not run a business profitably. So the one thing is understand your core metrics of your business, the sales cycles, the acquisition costs, the margins, those kind of things. So that's the first thing. Make sure you understand that. Think globally, and make sure you find partners that understand what you're trying to do.